A very good evening and a warm welcome to all the crypto enthusiasts. I would like to welcome you all to the land of Cryptoverse. I'm Rekha Khan, your host for the webinar, and we will have with us Mr. Aishwarya Gupta, strategist on crypto and blockchain, joining us for the webinar today. Today, we are going to be talking about understanding Defi, the need for decentralization. On joining, you would notice that all of you all are on mute. If you have any questions throughout the webinar, please write them on the chat section. At the end of the webinar, we would be holding a Q&A session where all the queries of the participants would be answered by the speaker. From the creator of Odin, MCX, IEX, here is yet another credible and exchange-neutral platform a user can rely on while walking towards the path of crypto and blockchain understanding. Starting from education to knowledge to latest news, all covered under one super app, CryptoWire. From a novice to a professional trader, every market participant can have a slice of information readily available on the touch of their fingers. Let me first walk you through the world's first crypto university, Crypto TV, and CryptoWire services. We all know that crypto and blockchain ecosystem is emerging at an immense speed. And to keep a track of all the events, prices, news looks to be difficult. So what if we had an app like our buddy who works with us, thinks like us, and responds to what we expect? Yes, you heard it right. Your own global crypto super app, CryptoWire. Let me now take you through the app briefly. Here is a global crypto super app, CryptoWire. Let's start with the homepage of the app, which covers all the three pillars: Crypto University, Crypto TV, and CryptoWire. Under the CryptoWire services, we have rolled out India's first global index of cryptos, IC15, yet another feather in CryptoWire's hat. It tracks the performances of top 15 cryptocurrencies globally based on market capitalization. Crypto enthusiasts and crypto traders can take informed decisions based on IC15. WireWatch. In this section, we can monitor the best exchange to buy and the best exchange to sell a particular cryptocurrency. In the center of the screen, we can also monitor the arbitrage opportunity available between the two exchanges for the same cryptocurrencies. There are more than 350 plus cryptocurrencies listed in our platform, along with 70 plus crypto exchanges worldwide. Coming to Crypto TV, it is an exclusive 24/7 mobile IPTV covering everything on crypto and blockchain. We are available currently in 4 different languages: English, Hindi, Gujarati, and Marathi. Crypto University, being the world's first digital university to offer courses on crypto and blockchain, you can find the best courses offered by MIT and Harvard at a single click on the app. With this, I would like to introduce to you all the speaker for today, Mr. Aishwarya Gupta. Mr. Aishwarya, a chartered accountant and an alumni of Indian Institute of Management. Aishwarya is a blockchain and crypto, especially Defi strategist. He is currently working as a blockchain growth specialist in Polygon, India's biggest blockchain project. In their Defi space, he has exposure to working with multiple projects into designing their go-to-market strategies, development of tokenomics, building the product, and spearheading their operational strategies. He is also the founder of Blockchain Byte, an education institute to learn and grow in the blockchain space. His prior working engagement includes Seba Swiss, which is a crypto bank, ZepPay, which is a crypto exchange, American Express, and PwC, a global top audit firm. I would like to welcome Aishwarya Gupta to take over the session. Hi, sir. How are you?
Well, I'm good. How are you?
I'm good. Thank you, sir.
I'll just share my screen. So the topic that I want to talk about today is basically decentralized finance. And whenever we talk about decentralized finance, it's necessary to understand why exactly is decentralized finance an important thing for us to learn, or why is it something which is one of the most important things for us to do. Now, when we talk about first thing, which is centralized finance, there are certain problems. And without a problem statement, there is no point of learning something new or something new coming or evolving in the space. So that's why there's something called centralized finance, which we have been moving around from a very long period of time. And almost 40 years, there has been no change. And that's why most of the systems that have been there have become either useless or too slow for us to process the things that we are processing today. Fintechs came into the picture to go out and reduce or solve these or fill these gaps within the centralized finance. And while looking at these gaps, there has been a new industry altogether, which is known as decentralized finance, that has come into the picture. Now, when we talk about decentralized finance, first of all, let's talk about why exactly do we need decentralized finance, or what is the problem today that we're facing in order to go ahead and have a decentralized finance. So, firstly, like if I'm taking the example of banks because these are the biggest financial bodies here. Not that just it's just for the banks. It's for any financial institution and everything out there. So banks usually facilitate all your payments and they accept deposits. You go out and take loans out there, and as an individual or as a business, you go out and complete your business there. So banks are something which have been very important for us. But what happens with banks is banks are managed by something, or every such financial institution is managed by humans. And when they are managed by humans, what happens is these humans make the policies, and when these policies are edited or these are made, there are various human related risks that are there, which is basically lack of proper management or probably corruptions. Also, a lot of intermediaries in between, which are sucking up all the capital or the money in between, so in the name of intermediaries. So that is something which is as a problem that I see personally. Now, when I move towards something which is known as decentralized finance, we have to understand that decentralized finance is something which is going ahead and which is solving the such problems. So let's look at the three biggest problems which are there with the centralized finance systems, and then see how these three problems can actually be mitigated or solved when we're talking about it. So the first thing is basically payments and clearances or remittances. So whenever we are talking about payments or clearances systems or remittances, today if we see, if we take the example of let's say countries like Africa, still today the cost of transmitting money is very high. Sometimes the highest cost in Africa is somewhere around 15 to 20%. Imagine a day wage earner who's earning $100 a week has to actually give these agencies $20 to $25, which is a huge amount to go. And also, like when you talk about these clearance systems, they're not always upfront, or they're not always like you just press a button and the money will reach across borders. It usually takes time. It could be 3 days, 4 days, 1 day, 2 day, whatever, but it takes time. So first of all, it is time consuming, and second of all, it is very high cost. Now, when this happens, what happens is basically because of these particular reasons, you cannot go out and you cannot have something like a remittance in this today's world, which is so slow and so costly. Now, when we talk about these decentralized finance organizations or these protocols, they have become so important today, and the cost of remittances and the time that it takes is so less. So let's even like if I take the example of XRP, XRP transmits money within seconds. If you want to transfer the amount directly through an XRP account, it will take somewhere around. It will cost you somewhere around less than a paisa. If you do it, let's say from any of the decentralized platforms like DAI, even then, if you are on the Ethereum network, even if you transfer $1 million, it will barely cost you $10 to $12, and the transactions are insane. So that is something where what happens is you're going ahead, and payment and remittances and clearance systems that had been created today are changing and they're becoming better. Second thing is accessibility. So today, when we talk about the word going ahead and the word actually coming into place where we are accessible from across the globe, payments. And if you see, there was a paper which was published in 1992, which was known as God's protocol. Now in this God's protocol, something was mentioned which said that today, if you want to go ahead and do a transaction online, what you have to do is you'll have to depend on a third party or an intermediary in between, which is known as God. If this intermediary is not available, you cannot go out and do the transactions online. So even with internet reaching every corner of the world, even making accessible for anyone to exchange information, but it was very difficult for anyone to go out and transfer value until unless there was a third party involved. Now these third parties, again, they charge you. The data that they have is basically something which they cannot 100% guarantee will be secured by them. So a lot of time what happens is once one loses the data and everything like that, so which is also something which is not a good thing, not a good sign at all. So these are these are the first two things. The last thing is centralization and transparency. We see that a lot of people, a lot of organizations which are centralized, they tend to say that they are very transparent and everything. But if that is the correct answer, I mean, they're governed by so many laws, they have to be. But if that is true, why there are so many places like where they're seeing like Panama Papers, FinCEN leaks, there are $1 trillion, $1 billion leaks, and still so also what happens is these transparency, when we talk about transparency, the government in which the government actually, when it goes out and when it actually makes these policies, there is no one who is even asked. They make the policies as per their own wishes, and that is why we often suffer from the fiascos of inflation. So these are the things which, when you come to DeFi, when you come to decentralized finance, and these are the major things that the DeFi is trying to solve. Now let's look at an example of how these things are done and how automation is actually being done through this platform. So let's say I go ahead and I take an example of this, which is there are two people, Alex and Bob. Now, Alice wants to go ahead and transfer $1,200 to Bob, but she doesn't want to go and give this $1,200 upfront. She wants to go ahead and give $100 every month to Bob, each and every month on the first of every month, and that is how it has to go up. Now, today, what we have to go out and do is, the problem with today is you have to go to the bank, you have to go and give them a standing instruction. If this amount is, let's say, $12,000 or $12 million, you will also need an escrow account. You will also need a lawyer to ensure that all the terms and conditions are airtight so that you do not end up in a problem. And that is something which is a problem today. When you go ahead and when you talk about decentralized finance, these are basically run through smart contracts. Now, when you talk about smart contracts, what happens in a smart contract is, whenever you're going out and whenever you are building a smart contract, it is nothing but a condition which is if this then that, if else statement. And what happens with this is basically through smart contracts, what I'm trying to do is I'm trying to remove all these intermediaries. So let's say when I was talking about going to a bank and having giving them a standing instruction, chances are that whenever, let's say, for example, my standing instruction was at 12 a.m. and just before that bank servers go under maintenance, your transaction will not be processed. And so there were so many intermediaries in between. We involved so many costs also. But ultimately, what happened was you were still not 100% successful in doing your transaction. But through a smart contract, what happens is, in a smart contract, what you do is you go out and code this thing. Now, when you code this thing, first thing is there is no ambiguity in understanding. So if I have said something which is written in a code, both the people, like Alice and Bob, know exactly what the terms and conditions are. So there is no requirement of a legal person here. Also, the smart contracts can act as an escrow itself. And because these smart contracts are actually going out and being deployed on a particular blockchain, which is almost up 99.99% of the times, you cannot go out and these smart contracts will process your transaction, and there is no scheduled maintenance of the blockchains. So what you have done is you've bypassed all the intermediaries in between. There is no need to trust anyone like a bank or a third party or an escrow services or a lawyer. And you've saved the cost because there are so many intermediaries which were involved. They're not anymore. And also your transaction is 100% going through. And that is where what happens is this automation is enabling a lot of applications to be developed. And that is something which is known as a smart contract. And the whole DeFi world, which you see today, is deployed on just this condition, which is a smart contract. So let's look at what exactly is a decentralized platform, or what is decentralized finance. So the first thing, the movement that allows users to utilize financial services without any centralized body or the need of any centralized organization is something which is known as DeFi. Okay, these financial services are provided through a decentralized application. Now, these decentralized applications, why they are decentralized? Because they're not under the control of any single person. Then they're majority they are the majority of the blue chips, majority of the bigger projects are deployed on Ethereum because of its existence from a very long period of time, because of its ways in which it is going out and it is enabling all those applications, it is enabling all the transactions to go through smoothly. There are other platforms like Polygon, there are other platforms like Phantom, there's another platform called Solana, Avalanche. So there are a lot of such platforms, but Ethereum still remains to be the biggest one. And DeFi is not just a single product, basically, that saying that, okay, DeFi, that is a single product that is out there. It is a whole suite of products, which is basically targeting as to replace all those institutional ranging services like a banking, insurance, bonds, money market. And it's just limited to our imagination. So let's see this chart. So if you see this chart, basically today, when we talk about money, we talk about dollars, euros. In the same way, when we talk about decentralized finance, we see money as DAI, Ethereum, something like that. When we talk about current banking, the central banks, here we have MakerDAO, which is just like which is just like replacing the central banking. If you talk about commercial banking, the way work of major commercial banking was lending and borrowing and etc. Here, what is happening is basically the Compound and BZX and QuickSwap and all these platforms are actually going out and giving you all those commercial services that you required. If you talk about investment banking, Goldman Sachs, JP Morgan, there are platforms like Synthetics, DYDX, UMA, which are exactly doing the same thing. Then if you talk about exchanges which were there like NSE, BSC, here you have Uniswap, 0x Curve. On the other side, if you see brokerage houses, you had eToro and something which was there earlier. Today we have Zapper, Zurian, NGMT, all these platforms. Even if you talk about insurances, so insurances are also there on decentralized finance. If you talk about insurances today, we have Nexus Protocol, Yearn, Open, all these are insurance protocols basically. If you talk about payments, Stripe and everything, you have Argent, Coinbase Wallet, and MetaMask. And if you talk about asset management, like BlackRock, here you have token sets, which is exactly doing the work of a particular asset management company. Now, when you go ahead and when you talk about these replacements, let's look at what exactly are these replacements or how these replacements are actually being worked out or what are these replacements actually. So the first example is a stablecoin. Now, when you talk about stable coins in a DeFi environment, stablecoin is something, first of all, let's understand what is a stablecoin. So when you talk about stablecoin is something which is pegged to an external commodity or a currency. So it's not, so let's say if you talk about USDT is pegged to a US dollar. So one US dollar will always be equal to one USDT. There are some fluctuations which are there, but that is due to volume. But more or less, it will always be somewhere between that $1 range. So that is something which is pegged to a currency. There is something called PAX AG, PAX-AG. PAX AG is something which is pegged to gold. So where what is happening is the value of one PAX token is pegged to a certain amount of gold there. So that is something which is a stable coin. But when we talk about these things, these again peg back to the centralized formations like the one that is like US Treasury, because it was pegging to US dollars. So that is why when we talk about decentralized finance, there was a different way in which we were trying to peg this up. Where because if you talk about the stable coins or if you talk about the fiat currencies that we have today, there is no backing behind them. There is no gold reserve, there's nothing like that behind it, which is backing these currencies. And when we talk about DeFi, we always have looked towards having all the things as a collateral. So if you look at a collateral, if you look at a decentralized stablecoin, which is known as a DAI is something which is backed by various cryptocurrencies like Ethereum, like BAT, and all. There's a bunch of cryptocurrencies which are there, which are going ahead and are working as a collateral. So once you go and mint DAI, there is a collateral behind it, and every time you want to redeem a DAI, you have a collateral backing it, so you can go and reclaim the collateral, which is not true when you go ahead and talk about a fiat currency. You cannot, if you want to go out and if you want to give a 1,000 rupee note back to the central government, they will not be able to go out and give you anything in return, because that is just a promise that has been given to you. So you're just returning your promise back. That's it. So that is something where a stable coin comes into the picture, which is completely different from how the how the currencies or the fiat currencies work today. So that is where what happens is there's 100% collateralization. Now, whenever a new industry or whenever a new thing works out or whenever a new economy builds up, first thing is you need money. So this is how you create money here, through a proper collateral. Now, once you have money, the next thing that happens is, let's say, whenever you have money, you have to decide two things. When you have money, either you have money which you do not need, or you have money or you need more money. So let's say you're not doing anything and you have a lot of money. What you will do is you will basically go out and lend your money to a particular bank. This is where, in the same style, in a DeFi, you go and particularly lend it to a lending and a borrowing protocol, let's say Aave. And what you do is basically you go ahead and you give that money to them. Once you give that money to the bank, what they will give you is they will give you an interest. Cool. Now, on the other hand, let's say I want money to start my business or something like that. I'll require a bank loan. Now, here what happens is you can actually go ahead, put some collateral, and withdraw a loan. You take a loan. Now, this is something which is very good here. Reason being, if you like want to go out and compare this loan to a traditional bank loan, what happens is, first of all, there is no need for a credit score. There is no need for any documentation that you need to do. There's nothing like that. So you do not need to go out. You do not need to do any documentation. You do not need to do any such thing like that. All you have to do is go and sign up through your decentralized wallet, which I told you like earlier as MetaMask. And then all you have to do is you have to put collateral. Once you have put collateral there, what you can do is you can basically go out and withdraw loans. Now here, what happens is it does not matter if you are anyone. The code will always give you exactly the same way. It will treat you exactly the same way it treats anyone else. So there is no human emotion involved here. So the chances like Nirav Modi going in and putting out the money there, or anyone who's going out and putting a money there, it will not happen that those people will not be able to get it back, or those people can fraud these people up, because it's code. You cannot cheat the code. In a key code, if they've asked you a collateral, it does not matter even if you are the Prime Minister of US, you will go out and you will always be able to not draw a single penny until unless you deposit a collateral, which enables what? First of all, lesser or no bad debts, because everything is collateralized. If everything is collateralized, you cannot have bad debts, which is one of the biggest problems of the traditional banking system. They're very high bad debts. Second thing is, when you all these protocols, like if I was talking about Aave today, it holds more than $21 billion under its reserves. 21, that is more than the amount which is actually out there in certain PSU banks in India. And if you see PSU banks, the number of people they employ are in more than 10,000 or 50,000 people to employ and to run these networks. While on the other hand, Aave just has less than 100 employees. But they're doing the more volume than these people. They're maintaining the systems even in a better fashion. So that is where a lot of fixed costs that you're involving reduces. And if the fixed costs are reducing, bad debts are reducing, what happens is ultimately all the benefit gets passed on to the users, which means that you will always get a higher rate of return or yield on these platforms as compared to the traditional banking systems. So that is where what happens is you're able to go out and you're able to lend and borrow in an instant. So I drew a loan of $20,000, let's say, on Aave, and it took me like less than a minute to actually go out, submit my collateral, connect my wallet, and draw a $20,000. So that is how quick it is. On the other hand, if you go to a traditional bank and you have to do it, you have to go submit collateral, you have to do XYZ things. It will take you up to a month to actually go out and take it. And also, if whatever rate they have decided on your credit score, you cannot fight from there. While on the other hand, everyone is equally treated on Aave. So if you are someone who is going ahead and having a credit score which is good enough, where there's no credit score required at all. So even if you have a bad credit or a good credit, everyone is treated as the same. And because they are all treated as the same, and every 24 hours, what happens is whatever the rates are there, all those rates are automatically. So if there is more deposits, lesser borrowings, so what will happen is the deposit rates will reduce, and so will the borrowing rates. So that means you only have to pay, which is the interest, which is actually there, not just an arbitrary rate which would be reset every 12 months. So that way, this lending and borrowing protocol goes ahead and changes a lot of things for us. And obviously, it brings a lot of efficiency. Then if you talk about exchanges, I don't know if how many of you are actually traders or something like that, but if you are a trader, you would have seen most of the centralized agencies, when you have a huge volume, what happens to them? They all go underwater, they all shut down, and you're not able to sell your cryptocurrencies and everything like that. So that is a problem which everyone faces across the world. There is no such exchange which can give you 100% guarantee that you will be able to trade if there is a high volume and the servers are not ready for it. So this is where what happens is, if you look at decentralized exchanges, first of all, there are two things you have to understand when you're talking about exchanges: in a centralized and a decentralized. In a centralized exchange, what happens is, whatever cryptocurrency that you're holding in a centralized exchange, you are 100% putting that cryptocurrency in the custody of that exchange. And hence, if they are hacked, all your cryptocurrency might be lost. While on the other hand, when you talk about non-centralized or decentralized exchanges, all the custody of your cryptocurrency is with you. If everything is with you, so you do not have to worry about which exchange is getting hacked, because that cryptocurrency is there in your wallet, which is in your laptop or wherever you have stored it. So that is where, which is one of the biggest things about a risk. Second thing is, you have to set up the passwords on a centralized exchange which can be hacked. There is no such password which you have to set up in a decentralized exchange which can be hacked. Every time you will have to go out and you'll have to set up a new wallet if you do not remember the paraphrase of that. So that is again a better thing out here. Then the last thing which is there is, whenever you are transacting here in a decentralized exchange like Uniswap, it is more than capable of transacting and holding the values across the world, no matter how much volume comes into the picture. So if you remember, there were a lot of places where people were losing money when the markets went under because they were not able to sell and everything like that. However, what happened here in the exchanges was that you did not actually need that. You did not all Uniswap was very easily working on that day, and personally I settled like $2-3 million on that day, and it went like it does in any other day. So that is where the decentralized exchanges are built enough to sustain to high volumes. They're also enabling you to have the custody of your own crypto assets, so you do not lose them if the exchanges are hacked. Also, you always are able to go out and you're able to transact with the high liquidity that is there, which is always available in the platform. So that is something which is on the exchanges side, decentralized exchanges. The next thing that we talk about is, let's say, derivatives. So if we talk about derivatives here, derivatives are something where traders use these derivatives to hedge their positions and decrease the risk of a particular trade. So earlier there were very limited derivative platforms, but as people are moving towards it, what is happening is slowly and steadily they are going ahead and they are making sure that all the people and everything that is happening on the derivative platforms can on a normal trade platform can happen on a derivative platform. So that is again that is again another thing which you need to understand, that anything that you want to hedge today, that there is a derivative platform available to go out and do that. So derivative platforms are mainly traded on a centralized platform, but DeFi platforms are starting to build these decentralized derivative markets, and there are a huge number of derivative markets which are available today. DYDX, Open, Nexus Mutual, they are all going out and giving you those derivative options. There is something called Gains Protocol. There is something called Augur. So a lot of such protocols which are coming today and enabling you to do those derivative trading in a decentralized platform. So you don't need to go to a centralized platform just to do derivative trading. Then the next thing that comes in the picture is fund management. Now, when you talk about fund management, what happens in a fund management is basically the fund management is where basically it's a process of overseeing your assets and managing its cash flows. So there are two ways in which anyone can manage their funds. First is active fund management, and second is passive fund management. Active fund management is basically where what happens is you have your own team which is making or going out and making all the decisions and ensuring that you go out and get better returns than a benchmark fund which is available in the market. So that is something like all those mutual funds and everything that you see, they're mostly active fund managements, where there's an active fund manager which goes out and tells you that he will go out and get better returns than the benchmark which is available. And based on that, he will charge you an excess fees because he has made you better returns than the benchmarks. These benchmarks could be Nifty 50 or something like that. On a passive one, what has happened is they basically do not go out and do the active fund management. What they actually go out and do is they actually go out and they mimic any other platform which is out there. And mimicking this basically just means that they will just copy paste whatever is happening on that platform, and based on that, they will be able to go ahead and they will be able to go and use the services. So DeFi has also enabled that there are protocols like SEX. So SEX is a protocol where you can actually go ahead and allocate your funds based on the strategies that are developed on the platform and enjoy the returns that are there. So DeFi Pulse basically is one of the platforms which is going ahead and which is enabling you to do all these services as well, where you can just go out and check these things out. Then the next thing is payments. If you talk about payments today, like we have a lot of cryptocurrencies which have enabled payments, but we need specific platforms which can go ahead and which can enable these payments in a way where everyone is able to go out and get those funds properly. So there is an application called Sablier, let's say, where what happens is basically imagine by the end of the day. So Sablier is a stream, like you can imagine streaming of audios, streaming of songs. What basically I'm telling you is here you can stream your payments. So when you're streaming your payments, basically what happens with a streaming payment is basically where you just go out and you stream payment. So let's say I want to go out and I want to have a meeting with someone, and when I'm going out and having a meeting with someone, I don't know him, and he says I want an upfront payment. So instead of giving him an upfront payment, I start a Sablier line with him. The payment, let's say the meeting is for 30 minutes and he's asking for a 10,000 rupee. So what I do is I load 10,000 rupee on Sablier and run a 30-minute clock. So let's say if the meeting runs for 20 minutes, so he's just paid for the 20 minutes, not 30 minutes. And so here what happens is the person is getting paid as the service is getting completed. So he does not have to worry whether he is going to be paid. On the other hand, what is happening is for the person who is giving the services, he ensures that the payment is only being released to the person after he has got the services. So that way, these payment services are enabling as a trust factor in between, so where nobody can actually go ahead and dupe anyone, and both the people can go ahead and get advantage of this service. Also, a lot of people where these services are being deployed are day wage earners, where as the day ends, as they move out of the factory, what happens is automatically the day's due is credited to them. So that is another way in which DeFi is actually going out and helping these folks. Moving to the last one, where we have insurances. So if we talk about insurances, we see that today DeFi is still very new. And if it is very new, what happens is there are ways in which you can lose money. There are going to be hacks in the smart contracts because smart contracts have loopholes, and there are going to be places where people who are running successful platforms might one day, let's say, die without telling anyone the secret code or lose their memory, which happened like 2 years back with someone who was there was an investor which came in Jaipur. He had somewhere around $200 million of people under his command. He died in Jaipur and nobody knows where the money went. It's still lying there because nobody can claim that money. So that way, what happens is there are a lot of risks which are involved here, and that is why having an insurance is very important. So there are protocols like Nexus Mutual and everything. So whenever you're going out and doing anything on any protocol, you probably can go ahead and get yourself insured for any hacks on the platform, anyone losing the keys and something like that, at a fraction of a cost. It will cost you, if it is a relatively new platform, it would cost you somewhere around 6 to 7%. If it's a relatively old and a battle tested platform, it will cost you somewhere around 1.5 or 2% as insurance. So that is something where what happens is if there is any hack or any problem there, all you have to do is just submit the documentation, and based on that, you just go ahead and complete and safeguard yourself to a very big extent through insurances. I mean, these are all the protocols which are developing in the decentralized world, and this is how the decentralized world is taking shape. While you're going ahead and whenever you are engaging in all these services and whenever you're going into the servers and everything, beware that if someone goes out and tries to say that you are selected for cloud mining services, or there's a Bitcoin investing package which is going out and giving you 2% every day, there's no such thing that exists. If that thing existed, everyone would be a billionaire. So there's no such thing that exists. There is no code base. So there are some people who just on paper say that this is a very good project, but there is no code behind it. Or absence of key information. Whenever you're reading about the protocol, maybe you do not know if there is any white paper, or the team is not doxed. Team is a complete ghost team. There is no token economics as to what exactly the tokens are going to be used. The smart contract has the pseudo keys, which are completely in control of everyone who is deploying the project. So all these things are red signals. So whenever you're going ahead and whenever you're investing into cryptos on the DeFi platforms, these are a must for you to go and take into consideration. I think that's it from my side for presentation on what is DeFi. Happy to answer any questions if there are.
Thank you. Thanks, Aishwarya. That was a very interesting and informative session. I would also like to thank all the audience for the interest that they've shown and patiently waited. In fact, I have a lot of questions that have come in. Aishwarya, I would appreciate if you could address all of them.
Sure.
So the first question that I've gotten is about what is the scope of Defi in 2022? So how is it growing, and what is the kind of scope that we can expect?
So I think when we talk about the scope, this is just the starting. There are a lot of things which will happen. There are a lot of things which will go ahead where all these things are going to be made. So all I can say is this is just the start of the DeFi ecosystem. And if you look at 2022, I see more structured products coming out in the market and more user-friendly front ends, so that people can actually go out and see all those things.
Great. Then we have one more question, which is the most popular DeFi blockchain as of now?
DeFi blockchain is Ethereum. So Ethereum has still so we see as a total value locked as the biggest metrics to go out and see which is the most important one for everyone. So if you see Ethereum has still more than 69% of the total deposit base.
Okay, great. Coming up next, what are the core metrics for valuation of Defi?
Core metrics is something where you have to go and look at what exactly the team is, what is their experience, what exactly is the token economics of the particular platform, whether that is something which is required in the market or they're just riding the wave. What exactly is the market size of the platform of the industry, and where you think they fit? What are the funds or the VCs that are backing them? So these are the major things that one has to see if you're making a substantial investment in anyone.
Okay. Next up is, can you expand on the MCAP to TVL ratio?
Market cap to TVL ratio, basically, when you talk about market cap is completely different. Market cap is something which is of a token. So let's say you talk about Ethereum. So Ethereum's market cap will be calculated based on the circulating supply of Ethereum multiplied by the price of Ethereum. So that is market cap. When you talk about TVL is completely different. TVL is the volume or the value that is stored in the form of monetary way. That is a way in which you calculate the monetary amount that is stored on that particular blockchain. So they are not interrelated to each other.
Okay. Now, what is the difference between a D5 and a D app?
DeFi is decentralized finance. That is the whole ecosystem. When you talk about DApp is an application which is just like a front end. So you use PhonePe today. So PhonePe is basically a application which is centralized. So that is a C app. D app is basically which is decentralized app, and DeFi could be something which is like a finance sector. So finance sector to DeFi, PhonePe to a D app.
Yeah, I hope that is an answer for the person who's asked us. Which are more popular for initial coin offerings or initial token offerings? Is it centralized exchange or DEX platform?
Decentralized exchanges have more listings because obviously they do not have to go, and there is no legal check which is done. There is nothing. So where they have to go out and ensure whatever platform is coming in. So yeah, decentralized platforms are basically bigger places for having those IDOs and ICOs, but always there is a risk of rug pulls, which is people just defying all the money and taking away the money if you do not see the smart contracts how they are created. On the other hand, if you see all these IDOs and everything on a centralized platform, they do the due diligence and then only they go ahead with it. So obviously they are more secure.
What is the due diligence done before ICO or ITO on exchange platform?
I mean, it could be depend upon exchange to exchange. There is no certain criteria which is there, so cannot comment on that.
Okay, so that was the last question that we had. And I would like to thank you for being, very patient and answering all the questions to our audiences. I would also like to welcome all the crypto enthusiasts to kindly download the CryptoWire app today and be a part of the global learning. Aishwarya, I would also request you to download the app and be a part of it. We are also, having a webinar next week on Tuesday. We would appreciate if all the participants log in and participate in the same. Thank you so much, Aishwarya. That was great interacting with you. Thank you so much, sir.
Thank you so much.